All right, good evening, everybody. Hopefully you all are doing well. Today is Friday. It is June 2nd, 2023. Boy, was it a hot one today in Manhattan. It was about 90 degrees. I think it got up to a high of about 92 in Central Park. However, it has cooled down substantially. I think it's only going to be, maybe 73, 74 degrees tomorrow. It was actually raining quite a bit, only for about 3 or 4 hours, and then it stopped. But there's a lot to talk about today. A lot happened on Wall Street on this all but short trading week. We got a lot of economic data that came out, but today was the big news on the street, which was the NonFarm payroll report. And wow, that report came in way above economists' expectations, way above my expectations. Payrolls came in almost at 340,000. 339,000 jobs were added, to be exact. And the unemployment rate did actually tick up a little bit to about 3.7%. That is up from 3.4% in April. Now, the equity indices all followed through big time. The S&P 500 up about 1.5% today. We cleared a bunch of overhead. We're trading above the 100-week moving average for the first time in over a year. So the indices are making some substantial progress here. We do have a big announcement coming out of the cybersecurity sector, particularly Palo Alto Networks. So Palo Alto Networks is a leader in cybersecurity. It trades under the ticker symbol PANW. It was just announced that they were added to the S&P 500 today, right at the market close. The stock's up about 5%, and I think it'll probably run a little bit on Monday, being that, indices and ETFs have to gain exposure to the stock because it is now a part of the S&P 500, and very well deserved, might I add. Palo Alto Networks, in my view, in my opinion, is by far the leader in the sector over Zscaler, CrowdStrike, Okta. Pretty much you name it, I think Palo Alto is the leader there. So we'll talk about that. We're going to do a little bit of a deep dive into the NonFarm payrolls report that came out today. We're going to be going line item by line item, which specific sectors in the economy are adding the most jobs. Is it government? Is it healthcare? Is it hospitality and leisure? Is it construction? We'll talk about that tonight. Also, we're going to talk about the housing market a little bit. There was some big news coming out of ticker symbol DHI, which is the ticker symbol for D.R. Horton. Now, the stock is trading at a new all-time record high today. There was some news that a big New York-based investment fund purchased over 4,000. That's correct. Purchased over 4,000 single-family homes from D.R. Horton. The deal closed for about $1.5 billion was the transaction. So we're going to talk about some potential, let's just say, trends in the institutional space as it relates to the housing market. One thing I do want to do, let's go to cnbc.com/bonds. Let's check the yield curve for a moment. So it looks like that 1-year Treasury is trading at 5.258%. The 1-year is trading at 5.25. The 10-year U.S. Treasury yield is trading at 3.698%. And then if we go to the 30-year fixed rate mortgage, I believe the average, the 30-year mortgage, everybody, came down a little bit, actually. We were trading at a 7 handle all week. We were trading at above 7% on a 30-year fixed. According to CNBC right now, the average interest rate for a 30-year fixed-rate mortgage is 6.88%. Let me go ahead and drop that link in the chat so you all can see it yourself. And we'll get started. So let me go ahead and put my laptop away, everybody, and I'll say hello to all of the viewers. Tonight we're going to be walking around the West Village, and then I want to take you guys to Chinatown because we haven't been there in a long time. So give me a minute. All right. So what do you guys think? What do you guys think? I mean, if you remember from yesterday, we talked pretty much the entire stream. We were talking about the Federal Reserve, right? Next week is the second week of June, which means we are all preparing for the next FOMC meeting, which is going to be June 13th through the 14th. And I think after today, I mean, we'll discuss it, we'll talk about it. But after today, I mean, my God, non-farm payrolls really, really strong. I mean, 339,000 jobs added in the U.S. economy, when I think the consensus estimate was for about 150,000 jobs, maybe 190,000. Anyway, blew away expectations. I see Brian is here. What's up? Tiffany Allen, good to see you. Happy Friday. Don't Be Evil is here. Says hello, Tom. Lemonade, welcome. The one and only ABX Girl is here. Good to see you, ABX Girl. British Gray says hey, Tom. Gustavo, welcome. Godfather says greetings, Tom. Good to see you, the Godfather. Buy the book. Good to see you. I'm gonna get off this subway grate. Where are we right now? We are on Varick Street. This is a view looking downtown into Lower Manhattan. Sam is here. Good to see you. Richard Vogel, Jenny Trickett. Says hello, popping in before I gotta go play. Everybody have a good evening. Thank you for stopping by. Jay says good evening, Tom. It's Lou Gehrig's day today. Oh, I didn't know that. Interesting. Irish Lou, what's up? Welcome. Randy. Jim says really enjoy your channel, Tom. Thank you, Jim. I appreciate that very much. I wanted to showcase a different neighborhood every night, and I think we've been doing that ever since Memorial Day. So we're gonna take a little bit of a stroll through the West Village tonight, and I think it was appropriate to do that tonight because it is Friday, and the West Village is really known for its nightlife here in Manhattan, a lot of bars, lots of restaurants, and the like. So I think we're going to see some cool and interesting stuff. A lot of people are out and about, as you can tell already. So we're going to head north first. We'll maybe pass by Stone Street, or excuse me, maybe pass by Washington Square Park, if we have the time. And then I want to head downtown to Chinatown. We'll wait for the light and then we'll cross. San Miguel is here, says good evening, Tom. What's up? Somebody says Hell's Kitchen. Maybe we'll do that tomorrow. I don't know. I don't really like walking through Hell's Kitchen at night. It's a great area. I love Hell's Kitchen, don't get me wrong. But at night, that is when the stuff happens. B says hey, Tom, and walks from Wall Street friends. Glass of Beer 12 says tuning in from Thailand. Good to see everybody from Thailand. So, I mean, what did you guys think about the market action today? Every time I turn on CNBC, Bloomberg, Fox Business, real quick, this is actually the top of the Empire State Building. You can see the spire of the Empire State Building right there. That little teeny thing. But the only analyst, I should say big name analyst on Wall Street, that appears on the mainstream financial channels that has really been, correct in calling this rally is Tom Lee of Fundstrat. Now, he gets a lot of flack, takes a lot of heat on CNBC, but I actually think he's a really good analyst. And the S&P 500 is clearing a lot of overhead, and so is the NASDAQ. Particularly if you look at the NASDAQ 100, I think for that it'd be easiest just to look at the triple Qs, right? Which is the ETF that tracks the NASDAQ 100, which makes sense why that's rallying, because it has all of the tech exposure without any of the financial exposure, and we know that financials have been doing really poorly due to obvious reasons, such as the Silicon Valley banking collapse and the like, a lot of other regional banks as well. But this market has really been climbing a wall of worry. And there was some data that came out that was published in the Wall Street Journal. I think it was 2 days ago. We may have covered this. And it was about not only institutional exposure, but retail and individual investor exposure as it relates to equities. And we are essentially at some of the lowest levels of exposure we've ever had as it relates to the retail investor to equities. However, we're starting to see really, really massive amounts of fund flows into fixed income, which is, bonds, because bonds are finally attractive, right, as interest rates have gone up. So money is flowing into fixed income, money is flowing into money markets and brokerage accounts and things like that, all while the levels of exposure to equities are really, really low. And just a little piece of anecdotal data here, a lot of the fund managers that I know that are running their own money and money for clients, they also have, everyone I talk to, and I talked to one today, they're like, we're not getting too crazy here. We're sort of being very reserved. We have high cash balances. We purchase treasuries for our clients, having money sit in money markets. And if we are putting on positions, and if we do choose to purchase individual stocks, we're only really risking about 1% of equity, as opposed to, during a traditional bull market, maybe you would commit, 5% of equity. You would try to get some size on early in the position. So, this is possible that the market continues to climb this wall of worry, so to speak, and perhaps all of the money on the sidelines will flow in due time. Now, I want you guys to notice the different styles of architecture here in the village. It's really, really beautiful down here. I kind of wish I could take you guys up on some of the rooftops. A lot of the times they put like artificial turf or artificial grass down, and there's barbecue pits up there, fire pits and the like, and you can just kind of hang out, which is really, really nice. Hey, Justin S., this is every night garbage night in New York City. It seems like it, dude. Look at this. Look at that. Is that not the biggest pile of trash you've ever seen since last night? It's pretty big. Hey, Brick Stonewall, this is Tom. Barbara Corcoran and Elon Musk commented on the trouble in commercial real estate. Barbara says the vacancy rate in Midtown Manhattan is 50%, and she expects it to get worse before it gets better. I agree with her. Maybe she's been watching Walks in Wall Street. Who knows? We've been talking about that for a while. But I think Barbara's spot on. She's a smart woman, very successful, and she's a shark on Shark Tank. But I think she's right. It's a big problem. Now, it's not exclusive to Manhattan, though, right? Just to be fair, it's actually a little bit worse in other cities across the United States, particularly out west. We got some housing data and we got some real estate data out this week, and it shows quite specifically the further west you go, right, to some of the major cities like San Francisco and Seattle. If you want to talk about residential pricing, you're down double digits in some of those cities, right? So the further west you go, the weaker not only the commercial real estate market has been, but residential as well. So we're having this mass migration out of major cities on the West Coast to the East Coast, particularly, right? Even New York is holding up quite well. Sorry, I'm just mesmerized by this outdoor dining structure. I think this is pretty unique. It's sort of like a tent. It's not the traditional, outdoor dining structures that you always see, these sort of wooden structures. This one's kind of like it's like a tent, I guess. I don't know, looks kind of cool. But yeah, what does anybody else think about that statement? Because I saw that Barbara Corcoran made a comment on the commercial side, and essentially what she was saying is, there's going to be a big issue, right? Because not a lot of people know this. But think about all of the vacant, I would say, Class B, right? Class B and Class C commercial real estate properties in Manhattan. Now, you may think to yourself, well, somebody will just buy these units and just convert them into residential. Well, that's a good base case, but it's kind of I'm not going to say impossible. I'll say it's extremely expensive. Oftentimes, it could actually be less expensive to acquire these properties. I think a lot of them are going to trade for maybe at or below land value, and they're just going to demo these buildings and rebuild residential units, right? So I think a lot of the people that try to simplify it, I was reading a local article here in New York that some politicians were saying, look, we have to, it was just a ridiculous statement, but they're sort of blaming the housing crisis on real estate developers in New York, which is just totally backwards way to think about it. But they were saying developers should acquire these buildings and do the conversions. And it only works in very, very small instances because the cost to do it is astronomical, especially if you're dealing with buildings that had high levels of asbestos. It's almost just cheaper to demo these buildings and build them again. A lot of people are out tonight, guys. This is Bleecker Street. Tons of traffic. Yeah, Jafet Perez is Apple stock at 180. True. RS is hard disagree, Tom. That's all right. Jack S is, hey, Tom, I've noticed that over the last few months, international ETFs and mutual funds have been loading up on Japanese companies. Do you know anything about this? I don't really know anything about that, but I know that the Japanese stock market in general, I think, just breached an all-time record high since the 80s, right? It took since about 1980 until now. Oh, you okay? I think it took about, since 1980, maybe a little bit before that, for the Japanese stock market to reach all-time record high. Moon says, last month here in Arizona, there were 16,000 homes available, and this month only 11,000, but prices continue to fall. Well, did anybody hear about that big block sale that just happened? So there was a New York City-based real estate investment company. I'm going to butcher the name. I think it's called Pretium or Pretium, Pretium. Pretium Partners, I think. I'm probably pronouncing it wrong. But they actually just struck a deal with D.R. Horton. So ticker symbol DHI. They're going to purchase 4,000 single-family homes, if you can believe that. So these are huge institutional block sales of single-family homes that are going to be used for rentals. And the problem is, this is creating a lot of controversy between Wall Street investors and Main Street, I should say, mom and pop style investors. Because not only do we have, I think it's appropriate to call it a housing crisis in the United States, right? The cost of housing is very expensive here. The cost of a single family home is very expensive here. So the argument there has really been this. It's been, well, how could a little guy like me with, maybe just enough saved for a down payment and, a moderate to mediocre credit score, how can I compete with Wall Street, these big investment firms that are coming in here with quite literally billions of dollars in cash that are able to close on the spot, number one, and do all cash deals? I wonder what's going on here. So I think this was an all cash deal. $1.5 billion they paid for over 4,000 single family homes, and they're all going to be used as rentals. RS's commercial real estate is easily 3 to 5 times that. What do you mean? Irish Lou says well, there's a lot of different types of commercial real estate, so I think it's appropriate maybe if I just clarify. I'm talking office, right? Because you could have commercial multifamily, which I think a lot of that, I think a lot of the multifamily deals that were done in 2021, many of those deals were done with floating rate debt or adjustables. I think a lot of that is going to go back to the banks, and they already are, especially in Houston. We've been following and tracking some big multifamily deals that were done in 2021. All of this is on adjustables. All of it's on floating rate debt. That side of the commercial space is also going to go back, in my view. But yeah, I think I'm still bearish commercial office particularly. But I think that creates opportunity, right? We were just talking about, the late great Sam Zell. God rest his soul. Unfortunately, he did pass away about 2 weeks ago now. But that's how he made his billions, not millions, in distressed sales, distressed assets. And when markets are volatile, like they are in some parts of the real estate market now, well, look at this. This is a really good shot of the Empire State Building. So when markets are very volatile, and oftentimes illiquid now too, right? Because there's not a lot of deals being done. Hey, good to see you. There's not a lot of deals being done. That creates mispricing in the marketplace, right? So when there's mispricing in the marketplace, that creates opportunities for investors and people to come in there and make some money. Joel PMs is rezoning and permitting will slow the conversion to commercial to residential. Of commercial to residential. Yeah, Joel, there's a really good, I gotta give you guys a recommendation. There's a really good person you gotta follow on Twitter. His name is Strip Mall Guy. Has anybody ever heard of this guy? Really, really big wealth of information. I mean, if you're interested in the real estate business in general or just finance, I would create a Twitter account and just start to, dig around real estate Twitter, financial Twitter. And a lot of the big players in New York are sort of seeing the same thing and saying the same thing, right? These Class B office spaces in Manhattan, it's really just done for. So I think a lot of this stuff is going to be bought for pennies on the dollar, probably demolished, and they're going to build residential real estate. Now, we're headed more towards the NYU College Town area. Hey, Bree Graham says tomorrow is the full moon. Copy that. Mac Lover is here. Mac Lover, what are your thoughts on that new Apple savings account with Goldman Sachs?
Like at one point,
there was an article today in the Wall Street Journal that there was some hiccups. There were some hiccups of people not being able to move their money in and out of the account. And it's funny because I set aside some time today to actually open up the account, right? And that's how I sort of figured out, I came across this article that there's a select few people, I wouldn't say there's a lot, but there's a few people that are trying to open up their Apple savings accounts and they're not able to transfer their money. They're not able to access their money. Now, those are probably just the initial kinks of launching a new program, but I think I may wait a little bit to do that. Hey, Brick Stonewall says, Tom, according to Yahoo Finance, the average commercial real estate occupancy across the country is just under 50%. In some smaller markets, only 20% occupied. Yeah, it's interesting. Now, technically, I think maybe this is what RS was trying to say, right? Because if you think about the residential side of the market in New York, okay, let's just talk about the 5 boroughs in New York City for a moment. There is a little bit of an illusion going on that inventory is very low. So it is true that inventory is very low in Manhattan. However, there's tons and tons and tons of vacant residential apartments that just sit empty in Manhattan. And that's really due to the rent controls and all the other egregious laws that we have here. Because why would a landlord choose to renovate and get these units market ready for rent if they can't charge the appropriate market rent. Does that make sense? So they would rather just sit on all of these units and have them sit empty than invest the money into getting them rent ready and putting them on the market, because they just wouldn't be able to get their money paid back. The return on investment is just not there. So we are now on the corner of West 3rd Street and McDougal Street. All the way up this street, McDougal, it'll run you right into Washington Square Park, as well as New York University, NYU. J87 124 says, evening, Tom. I paid off my condo loan yesterday. Dude, congratulations to you, my friend. That is awesome. That must have felt amazing to really own your properties free and clear. That must be a very freeing experience. So congratulations to you, dude. That's awesome. I love hearing stuff like that. You know, in a market where all the headlines are negative, those are good stories to hear for sure. I mean, we did get some good news today, right? NonFarm payrolls came in extremely, extremely hot. What is this place called? Cafe Wa. It's a pretty long line outside too. Hey, hang with Mark Mom says, Tom, I'm holding off opening with Apple until they work out their kinks because I need my money liquid. I want it faster like Discover Savings. Yeah, I mean, I don't know. I think this was probably just a one-off issue. But I'm much like you. I think I'm gonna hold off until they could work some stuff out. Now, in the article, it did say, well, Apple didn't make action for whatever reason. I don't know if that's just an excuse, but I don't know. We'll see. It's definitely not the best headline to put out when nobody trusts the banks anymore after all the banking collapses. Hey, Matthew P., what's up? Howdy, Tom, old chap, what's up? Marketing Videography is his very famous comedy club. Everything in Miami. This is Mid-Edit Tavern Burgers. Back this way because we may be buffering a little bit. This is Artichoke Pizza.
I don't think I saw that before.
All right, maybe this is a little bit better. Usually when you have a high density, a lot of people in one space, tends to start to buffer. So we'll see if we walk back this way, if it'll be all right. Hey, Matthew M says, hope everybody is having a good Friday evening. Good to see you, Matthew. Now, did anybody hear the news about Palo Alto Networks? Love the buildings down here. I think we'll take a walk around Washington Square Park just to check up on it, because I think that's one of the areas that's been improving substantially in Manhattan. You know, the northwest side of Washington Square Park has always been a really big, a sore spot, so to speak, for the city. We had a lot of drugs, a lot of badness going on, but the last time we were there, it was really nice, and the city seemed to clean it up 100%. Yeah, Wesley West, you were correct. One of my favorite neighborhoods in New York City, by far. Dusty Cole is here. This is what's up, Tomcat. Welcome. Yeah, Justin S. I use Verizon. I was thinking about switching to T-Mobile, but here's the thing. I've noticed. I think Verizon, you'll pretty much have coverage everywhere, but it's not the best everywhere. So you'll have like some coverage, but it won't be the best. But with T-Mobile, you'll have amazing coverage in like a couple square miles of surface, and then there'll just be total dead zones. So I think it's just pick your poison. Yeah, Lee says AT&T is king. Mainly in, I think the state of Florida, AT&T is the best. Lee, always good to see you. All right, here we are in Washington Square Park. Let's see how things are progressing here.
I went over there, I rolled a dice, I wrote somebody.
You know, speaking of telecom, I think Ryan Reynolds just sold his MVNO to T-Mobile. Did anybody see that? What was the final sales price for that? I think it was over $1 billion, right? I'm trying to think of the name. How am I forgetting the name? Anybody in the chat remember the name of the MVNO? That is Ryan Reynolds' company that he now sold to T-Mobile. Mint Mobile, you're correct. What a deal that was. I mean, that's man, $1.3 billion deal. Now, and that's such a good business model. And all you really need to do is just market it very, very efficiently, which he did, by the way. The marketing on that was fantastic. Because an MVNO, essentially what that is, for those of you who don't know, oh, these guys are playing badminton.
Sorry.
Love badminton. But essentially you have lease agreements with all the carriers, right? So you'll use and you'll roam off of all the different carriers' networks. And there's a lot of IoT companies out. I actually used to work with one where essentially they wholesale all of the data, right? So you'll have one SIM card, and depending on which zone has the best coverage, it'll use the data from that carrier, right? So essentially you're just wholesaling the data. And that's big in the IoT space, particularly in medical device. Remote patient monitoring, things like that. All right, here we are at Washington Square Park. Yeah, Who Dat Dave says Ryan Reynolds made $300 million off that deal. God bless him. I think he owns a soccer team too. Who Dat Dave says Ryan Reynolds had a 25% stake in the company, made about $300 million. That's awesome, man. I mean, the marketing for that was fantastic. Have you guys seen any of the commercials for that? And they would mainly go to market where the consumers are, right? They would run YouTube advertising. This guy's taking a bath in the fountain. Hey, Lorene Peters says, hello, Tom. Good evening. What's up? John Lee says, hey, Tom, do you think we are in a new bull market now with tech leading? Breadth hasn't been very good. Yeah, so I posted about this on Twitter today. If you want to check in with us over there, you could follow at Walks Wall Street on Twitter. But the tape, you know, really doesn't lie. And I think we had a really good close today. You know, the S&P 500 and the NASDAQ, particularly the triple Qs, which is the NASDAQ 100, you know, has climbed through significant overhead. Now, I'm bullish, but that doesn't mean we go up in a straight line. The indices look to me like they're forming some sort of a cup base, right? But whenever you have a cup base, you usually have a handle. And I think it's probably appropriate now that we're headed into summer, which volume tends to dry up on all the exchanges in the summer, right? Because all the big wigs on Wall Street go out to the Hamptons. They go to Connecticut, wherever their summer homes are. And that's when you usually see this dry up in volume, maybe price corrects down to the major moving averages, and then you resume the uptrend. Because you're right, breadth has been really bad, right? It's only been a handful of stocks that have been driving this, market return. If you look at, again, I would always keep this resource up on your screen. If you just go to slickcharts.com, so SLICK charts.com, it gives you the breakdown by weighting in the S&P 500, right? Because the S&P is a market capitalization weighted indice, and I think the top 10 stocks in the S&P 500 make up over 30% of the whole index, right? In just 10 stocks. So, if Apple moves 5% in a day, up or down, you could best believe that that's going to move the indice. So one or two things obviously is going to happen. It's either breadth is going to improve and catch up with the indices, or the indices are going to catch up with the rest of the market. I tend to lean optimistic. I think the rest of the market will catch up with the indices. So we'll see. I mean, Palo Alto Networks today was added to the S&P 500, I believe taking the place of Comcast. And that's another one of the beautiful things about, we always talk about Jack Bogle, right? Or John Bogle, who unfortunately passed away a few years ago. We've been losing a lot of really great Wall Street legends over the past few years. But, one of the things that Jack Bogle would always say, and he actually wrote a few books about this, I think his best book that he ever wrote is a very easy read. You could probably read it over a weekend. And it's called Common Sense Investing by Jack Bogle. And essentially he says, for most people, if you just buy the S&P 500 and consistently dollar cost average into the indice, to use Peter Lynch's words, corporate profits in America tend to grow 8% a year, which means the market ought to double every 13 to 20 years, depending on earnings recessions and things like that. Because with the S&P 500, if a company is not performing, if a company, is lackluster, they remove that company from the indice and they replace quality companies with great earnings growth, right? With all of those metrics that we talk about. So, Palo Alto, I think, was up 5% after hours today with the news that they are going to be added to the indice. And it'll probably rally a little bit more on Monday just because a lot of the, ETFs have to get exposure to it. There's probably going to be a lot of rebalancing there. But you're right, market breadth has been really lackluster and a lot of stocks are still breaking down. This is NYU Stern. So NYU Stern, we always talk about Professor Damodaran. So he actually teaches at this institution right here. He is considered the Dean of Valuation. He has two really famous courses here at the Stern School of Business, which is Securities Analysis and Corporate Finance. Really two great courses. Now, if you don't have, $70,000 a semester to go to this lovely institution of NYU, you could just go on Damodaran's YouTube channel and he pretty much uploads a lot of his lectures for free. So if you are, a self-starter, if you're an autodidact, just try to follow along and teach yourself, or just go on Amazon and purchase his book, which I think is the textbook that they reference. It's called Valuation by Damodaran. Hey, Ed T, this is True Tom taking the place of Dish Network. I didn't even know Dish Network was still around now. Anybody here in the chat have Dish Network as their provider? Yeah, that's true. Hang with Mark Mom is like, how many great doctors have come out of NYU? Everything in Miami says, what's the book on finance that you can't check out? So that is by one of the most famous value investors of all time. And no, it's not Warren Buffett. No, it's not Charlie Munger. It's a gentleman that goes by the name of Seth Klarman. So Seth Klarman runs Balpost Capital here in New York. He's one of the greatest investors of all time on the value investing side. And the book is called Margin of Safety. Margin of Safety. So there was only about 5,000 copies ever printed of this book. If you're in New York, if you're a New Yorker, and you want to look at an original copy of Margin of Safety. Oh, first, look at this, guys. Check this out. You could see One Vanderbilt right there. So you could actually see all the way up to Midtown Manhattan. Pretty cool. Yeah, you could actually look at an original copy of Margin of Safety at the Stephen Schwarzman building, which is on Fifth Avenue, but you're not allowed to take it out. So you're not allowed to actually check the book out because it's so rare. If you wanted to purchase a copy yourself, they can go for over $2,000. However, one of the things that you could do is you could look at a PDF of, essentially look at a PDF for free online. CAW says, if you know so much about finance and trading, why are you just a realtor? Well, I'm not a realtor. I spent the majority of my career in tech sales. So I would sell big, complex, enterprise software and telecom deals to Fortune 500 and Fortune 50 companies. And I currently help raise money for a very successful growth stock hedge fund called Ropel Capital Management, based out of Chicago. And stay tuned about the realtor part, because I think you guys will be seeing some interesting stuff soon, as well as on the private equity side. But what about you? What do you do for work, CAW? I think we'd all love to know. Joel PM says it's going for 5K on Amazon. Wow. Is there an audiobook? I didn't know there was an audiobook. If there's an audiobook, I would love to check it out. Emmanuel says, Tom, why are some companies...
I think it's good too that you're back.
What does this comment say? It says, Tom, why some companies do not register R&D as R&D? They put other names like technology and content. What do you mean? So research and development expense is really if you're investing into like a new technology or something, right? So if, for example, in like the biotech industry or the biotech sector, some companies, right, if you look at the balance sheet, the vast majority of, revenues will go to research and development. So I think on the side of pharma, right, everybody thinks, they think big pharma. They think these companies are making windfall profits, which big pharma is. However, there is a very niche sector of biotech which specializes in rare disease drugs, right? So in the rare disease drug market and in some biotech startups, they're not making any money. A lot of these companies are sometimes pre-revenue, and they will spend almost all of the revenue that they take in on research and development to try to make a new drug, right? So they'll purchase an old drug that only goes to service, let's say, a handful of people a year, right? And this is actually, ironically enough, the exact example that happened with Martin Shkreli's company, right? I think a lot of people misunderstood that whole debacle. They thought, Martin Shkreli's drug company was just making money hand over fist. That's not really how it works. You acquire these drugs. This particular drug went to cure toxoplasmosis, I believe. And you have to raise the price of that drug so you can use the profits from the price increase to invest money into improving the drug, right? So sometimes technology expense isn't necessarily an R&D expense, right? Sometimes it's a new technology or something brand new. Michael Joseph's patent is 15 years now, so the 15 better recoup the R&D. Manuel says he gave it for free, almost 60% of the drug. That's true as well. That's true as well. Michael Joseph says that school is now $60,000 a year. Wow. Yeah, NYU is a very expensive school. Very expensive. But depending on what you study, it could be worth it, right? All right, let's head towards the Bowery. Tyler says, I worked in biotech banking. All companies I worked with were pre-revenue. Yeah, it's a very difficult business. Very, very difficult. And that's why I really don't, very, very seldom, like very seldom, do I ever cover biotech stocks. Because I believe investing is all about having an edge, right? And I don't have an edge in pharmaceuticals. I don't really know anything about it. So there's a lot of people on Wall Street that'll trade these biotech stocks off of rumors of, clinical trials going well, right? There's rumors that the FDA is going to approve the drug because the clinical trials are going to go really well. And if that's the case, what is the total addressable market that the drug services? So these stocks tend to be very volatile and get really, really far ahead of themselves and really, really extended. And overnight, I've seen this many, many times. You could have some news that breaks before the open that says, hey, the clinical trial didn't go well and the FDA is not going to approve the drug. And then the stock literally goes to zero overnight, right? Is down 90%. And that's because some biotech companies, their revenue source is totally dependent on one product, on one drug. In many cases, right? Not all cases, I get that. But some of the new innovative, biotechs that, especially during 2021, were all the hype, right? These companies are pre-revenue, and if their drug does not get FDA approval, well, now you don't have a company anymore, right? Now it's a zero. So it's a very risky business that I don't have any expertise in. So I try to stick where I have an edge, which tends to be enterprise software, because I've sold these products before, right? I've sold telecommunications my entire life. I've sold cybersecurity software my entire life. So I know the buying cycles of businesses. I know why they're choosing Palo Alto Networks over, XYZ cybersecurity company. I know why they're choosing T-Mobile over AT&T and the like. So I try to stick with what I have an edge with. And I definitely do not know anything about biotech. But that's the show. All right, so we are now walking, about to pass East 5th Street and head towards St. Mark's, which we haven't been here, and I couldn't even tell you how long. Hey, Traderholic says, do you think that there are still insider networks on Wall Street? I mean, there's always going to be insider trading, right? And people trading off of insider information. But I will say this, the financial markets in the United States are by far the fairest and the freest markets going. And I think a lot of people, particularly a good example is what happened with all of this meme stock nonsense. I'm sure everybody knows what I'm talking about, right? With the GameStop and all the other ones, right? Like the AMC, all this nonsense. Unfortunately, a lot of retail traders were suckered into this nonsense, right, based off of hype. And they lost a lot of money. Everybody lost all their money in this stuff. And then the retail trader turns and blames the market. The markets are rigged, the markets aren't efficient, it's Citadel Securities' fault, it's Ken Griffin's fault that I'm losing money. And I just don't think those people really understand how markets work. And that's okay, because they're novice traders, they're novice investors. And the reason why they're losing money in the market is not because Citadel is scraping a few pennies off of them on the bid, right? That's not the reason why you're losing money, is because of market making, quantitative market making on Wall Street. That is not why. The reason why you're losing money is because you're buying garbage companies, like a movie theater, or a brick and mortar store that sells video games, right? So I think markets are really free and very efficient, probably even more efficient now than they were ever before. But it's the same thing that happens every time, right? Whenever there's this big, you can name any example, but I'm only naming the meme stock example just because it's so new and fresh in the mind of investors. Some of these people are like in a cult. It's crazy. You go on Twitter, you look up the ticker symbol GME or AMC, and these people are like so hell-bent on the reason why they're losing money is because of, Robinhood or Citadel with payment for order flow, when these people probably couldn't even describe what payment for order flow is. Michael Joseph, what's up? Yeah, Austin City Limits says, I'm glad the debt ceiling is resolved. Markets were in the green today, partly because of it. Was anybody able to watch President Biden's address about the deal? I think he was on, what was he on, at 7 o'clock? I wasn't able to watch it. I think hopefully I'll be able to watch a replay of it after this.
His work, mate.
Anything interesting come out of that? Did he say anything that we should know?
Yeah. They're gonna use the water.
All right, so we are now at St. Mark's Place. I guess we'll make it right. We haven't been here in a long time. I still want to get you guys in Chinatown. Hey, hang with Mark Moms. This Cooper Union area, nice. I remember that. This area, my friend went to Cooper Union Academy. Wow. Yeah, that's another good school. I'm trying to figure out how to get you guys around this construction. Let's go this way. I think this is the satellite campus of St. John's University too. 101 Astor Place. Who dat Dave says, Tom, what is your guess about it? I don't know. I mean, look, I like to stay optimistic. I'm not the biggest, Biden supporter by any means, but, maybe he offered some words of encouragement about the country. I mean, one could only hope. I don't know. I wasn't able to see it, so. Fingers crossed it was good. Michael Joseph says Tommy was on at 7 o'clock. It was a 5-minute speech. Copy that. Yeah, I mean, look, with the thing about, and I don't blame either the Democrats specifically or the Republicans specifically. It's just, I'm very convinced that this is the situation we're in. And I think we're going to continue to be in it in perpetuity forever. And this is a result of the massive experiment of quantitative easing after the great financial crisis. I'm really convinced that. the only way we can keep the system going, in a sense, now anyway, I think we've reached the point of no return, is to continue to print money and spend money increasingly every year. So that is the fiat monetary system that we live in, unfortunately. All right, here's some more beautiful townhomes. Michael Joseph said he said good things about the deal. Yeah, Who Dat Dave says, I respectfully disagree. Every penny of debt we eliminate can make our country stronger. Well, I mean, that's sort of, my base case is, in my ideology is that of, if you ever listen to Peter Schiff, right? So pure Austrian economics, not this modern monetary theory. However, again, I think this has never been done before, right? This great experiment of over a decade of artificially suppressed interest rates, right? And just massive amounts of money printing. You look at the time frame from 2015 to 2016 with the big taper tantrum, right? It seems that any time the Fed tries to raise interest rates materially, the market throws a big fit. Now, granted, speaking of interest rates, next week at 2 weeks from now at the FOMC meeting, we're supposed to have a pause in the Fed funds rate. But I think after today, I don't know if that is probably the appropriate response, right, to the non-farm payrolls report. Because non-farm payrolls came in way, way ahead of expectations. The U.S. economy added 339,000 jobs last month. I think the consensus on Wall Street was for 180,000 maybe? And not only that, the previous 2 months non-farm payrolls are all getting revised higher. So does that sort of really feel like a tight labor market to anybody? Now, to be fair, the unemployment rate did tick up to about 3.7%, right? But still, we got the JOLTS report out earlier in the week, and the JOLTS report shows that there's 10.1 million job openings in America right now. So I don't know if that's a base case for pausing, in my view, but we'll see. Hang with Mark Moms' mortgage rates are now averaging 7.35%. Yeah, I mean, I think interest rates came down a little bit though, today specifically. I think you had the 30-year fixed, according to CNBC.com. If you go to CNBC.com/bonds, the average 30-year fixed is, I think, 6.88%. Still high, right? All week we had a 7 handle, so still high, but hey, Randy the Machine says, unfortunately, the interest rates on the debt will keep them from ever going down. Yeah, the interest, Stan Druckenmiller did a really good keynote speech on that as well. But I mean, I guess again, there's always going to be something to worry about. If you spend too much time focusing on global macro, in my view, you're just going to be so petrified that you'll never be able to do anything. It's just sort of like you'll be paralyzed, because there's always going to be something to worry about, especially as it relates to the economy, the financial markets. But we always tend to work our way through it. Hey, SME Media is here. It's just hello, Tom and team. What's up? Always a pleasure. Good to see you, SME Media. Valerie says service jobs, waitresses, bellhops, and such not as many construction jobs. Well, I think we should actually go through that because that's actually a really good point. Now, if you go to the Bureau of Labor Statistics website, where are we now? Yeah, we're headed in the right direction. So we're going to cross St. Mark's Place from the north, headed south. We're going to go to Chinatown. But if you go to the Bureau of Labor Statistics website, they'll actually give you a breakdown of all 339,000 jobs, right? So which sectors were these jobs added in, right? And things like that. So the number one sector, I should say the two sectors that added the most jobs in May is business and services. They added 64,000 jobs between business and services. Then comes government. There were 56,000 jobs added in the government last month. Healthcare coming in at 52,000 jobs, which healthcare is always strong. I think, if you're in college or something like that, and you're looking for a pretty stable career that's always going to have good job demand, it's probably going to be healthcare. Just look at some of the statistics of the percentage of GDP that we spend on healthcare, and I could, unfortunately, almost guarantee you that percentage is only going to go one way, and that's higher. I don't see Americans getting any healthier, let's just say that. So healthcare added 52,000 jobs, and what Valerie was just talking about, leisure and hospitality, well, leisure and hospitality added 48,000 jobs, so still strong, right? Still really strong. Joel PM says, how many of the 58,000 government jobs are IRS agents? Hilarious. Well, you know what, Joel, with this new bill that Biden, announced, bipartisan bill, doesn't it cancel out all that? I'm not big into politics, but I think in the bill they threw out the funding for the 86,000 additional IRS agents. I think the Republicans were freaking out about that. Is that true, or is that not? Who Dat Dave says supposedly the new budget eliminated the 80s. Yeah, Who Dat Dave, you're right. So there was compromise from both sides. Main Street Moments says government in the U.S. is too big. Yeah, I mean, I'm a small government kind of guy. All right, East 6th Street. I want to give you guys a better view. I want to make sure I give you guys a view of some of the original buildings down here. Now, this is in real stark contrast to where we were yesterday. Yesterday, we were on Billionaires Row, 57th Street, looking at Central Park Tower, 157, 220 Central Park South, which just had a record contract signed, by the way. So over the Memorial Day weekend, there was a $75 million contract that went out at 220 Central Park South. Not a bad deal there. Hey, Hang with Mark Mom says, yep, a friend of mine is a senior software engineer at Epic. Both winners never starved with the right major in school. You know what? That's so funny. So when I was in my tech sales career, I would sell into all the major hospitals, nursing homes, and home healthcare agencies. Epic is the piece of software for a lot of the hospitals use. I know New York Presbyterian is on that, NYU Langone. So I was on a deal, we did a big rollout to New York Presbyterian. And if you've ever, hopefully you never have to go to New York Presbyterian Hospital, right? But if you are, and if you notice a lot of the nursing staff or the doctors are walking around with, tablets or iPhones with color coordinated cases, that was all done by our company. So we fully integrated the entire system there to integrate with their, hold on, let me just cross here. Sometimes the streets are so narrow here that these cars just come ripping by. But yeah, we fully integrated it with all of their software. That was a really fun deal to work with too, because I was pretty much on site the entire time, and it really just shows you how hard they work. A lot of the doctors, nurses, They really do God's work, let's just say. This place looks unique. This is on the corner of East 5th Street. It's a really nice night. Look at the clouds. Wow, Hang with Mark Mom says my son's friends are working at Epic. I probably know them maybe, or cross paths when we were doing some integration. That's really cool. TK Porsche says so we will get a huge increase in IRS agents and most of the spending in that category. I don't know. I got to look at the bill. I don't think so. I think they took that out. But, you know, not to get too political, but I will say this. The whole thing where they say, you know, nobody making less than $400,000 a year is going to pay a dime more in taxes, that is all BS. You will pay more in taxes. Yeah, Traderholic says I feel like Epic has monopolized healthcare information systems. I used to work in healthcare and never saw another system. Yeah. It's all, the healthcare world is all, it's a very, very small world, and it's all interconnected. I'll give you a name of another company. This relates to home healthcare, right? So chances are, and hopefully, God forbid, none of you have ever had to come in contact with home healthcare, because that means somebody's sick in your house or needs help. But if you have, especially here in New York, there's a mandate that passed actually 2 years ago, 3 years ago, before COVID. They kicked it down the road. They keep kicking the can down the road. But it's called the EVV mandate. So EVV is an acronym for electronic visit verification, which essentially means when a home health aide comes to the patient's home, they have to clock in and out remotely on a device, right? An iPad, a phone, that has to have the GPS coordinates locked. Because what was going on when you had the paper timesheets, you know, not everybody, but there were some aides that just weren't even showing up to work, right? And depending on the patient's condition, maybe the patient had Alzheimer's, they physically could not report that they weren't getting care from the aides, right? So there's one company, a really, really big company. They're actually based in Brooklyn, New York. Great company. I've worked with them a lot. It's called HHA Exchange. And they have a lion's share grab on the EVV market. And the home healthcare industry, that's another industry that is going to, I mean, it's already just taken off like crazy. It's going to get even bigger, right? Because if you look at the aging demographics of the United States, if you look at personal preference, people don't want to go to the hospital, right? If they don't have to. They don't want to go to nursing homes if they don't have to. People generally want to age in place with dignity in their homes. And if that means that we need to have more home health aides to provide that care, to provide that good service, so seniors can age with dignity at home, well, what do you think the population of home health aides is going to do? It's going to explode, right? So I'm very bullish home care. A client that I used to work with before I left my company, Motive Care, it's a publicly traded company. They rolled out, you know, thousands and thousands and thousands of devices to their home health aides to act as an employee retention tool, right? Because if you're familiar with home health care, the churn rate is extremely high because it's a really tough job, right? They literally do God's work. Home health aides are some of the most angelic like people I've ever met in my life. They're so kind, they're so caring, and their job is so hard. It's so difficult. So there's naturally a lot of churn. So anyway, long story short, they do a lot of employee retention programs with these aides where they provide free devices that they can use for both personal and work use. They can clock in and out remotely. They could update and upload their patient data to the cloud. They can remotely accept patient cases or deny patient cases. And that's worked wonders for them with the employee retention. So I'm very bullish home healthcare specifically. Hey, Elizabeth Gill says, yes, totally agree, Tom. Good to see you, Elizabeth. Richard Vogel, what's up? Joe Driver says, I love going. Yeah, Joan K says healthcare is important. I agree. And healthcare spending in the United States is only going to go up. That is almost a guarantee. Hey, Will says, Tom, just to add to the home health discussion. Wow, was just bought by Option Care Health in an all-stock merger valued at $3.6 billion. Let me take a screenshot of that, Will. I'm not familiar with that company, but I'm going to look into it. Very interesting. I wonder if, yeah, I've never heard of that company, to be honest. But thank you for sharing that with us. Ed T says there's a ton of home healthcare companies. I think there's going to be a lot of consolidation. There's already been a lot of consolidation in that business. Nina says 100% agree, Tom. Home medical care, healthcare. Yeah, you're right. I agree with that 100%, Nina. All right, where are we now, guys? So a Whole Foods is right here. We're close to the Bowery. Now, if we make a left on East Houston, it's going to run us right into the Williamsburg Bridge. All right, what do you guys think? Since it's Friday night, I'll let you guys choose. Hey, NYC Hiking Discovery, Kevin. This is Tom. Home healthcare staffing are everywhere. Many of them are under different names, but run by the same owners. Yeah, you're right. Especially in New York. I think the biggest in New York is, there's a lot of them in Brooklyn, particularly Ultimate Care is a very big one here. In Brooklyn, they're located on Gates Avenue. All right, what do you guys think? Should I take you guys to the Williamsburg Bridge, or do you guys want to go to Chinatown tonight? I'll let you choose since it's Friday. We're having a good time. Life, Liberty, and Guns, what's up? TC says, what are the leading companies that are in home health care? Well, one of which is called Motive Care, which is a publicly traded company, but there's a lot of big ones that are private. Chinatown Bridge. Wow, we're split 50-50, my friends. You know what? We'll do both. We'll do that since it's Friday. We'll try to do both because I'll take you guys past Katz's Deli. I'm not sure if you guys have been there, but this is really good. But we'll do both. We'll head to the Williamsburg Bridge, and then we'll double back to Chinatown. Now, I forget who it was. This may have been Hawaii in the chat.
That is so funny.
Hawaii, were you the one who sent me the article that Billy Joel this is going to be his last year at Madison Square Garden? It was one of you guys sent me that. I appreciate that, by the way. That's sad. I'm actually a little bit depressed. This is going to be Billy Joel's last year performing at the Garden. I can't believe that. That's a shame. Oh, Melissa 2087 says 2024 will be his last year. Well, I guess that buys us a year. I got to go to a concert. I can't not go to a concert before he stops. Yeah, TK Porsche. I also read that he is selling his mega mansion on Long Island. I read that too. I think he lives on the North Shore. Yeah, Smee Media says, I'm sad to hear that. I was sad to hear that too. But, I mean, that guy is a trooper. I mean, multiple shows a year at Madison Square Garden, which is not an easy task. Look at these buildings here. Now, I believe we're going to come up on a relatively new development called 1 Essex Crossing. which is a very nice property. I like the property a lot. We were working with some investors that were going to buy bulk units, like 15 units in there, and use them as rentals. If you want to look it up on Street Easy, the property is actually really nice. You know, it has all the amenities that you would ask for, and the rents are actually relatively fair for the neighborhood, right? Now the building is, I would say, more on the active side, right? I know, you know, with all the laws and regulations in New York, you're not allowed to say, like, it's a more young building, but, you know, it's a big bike community, I'll just say that. You're right outside of Williamsburg Bridge, so there's this really, really nice bike room. A lot of people bike to work over the Williamsburg Bridge every day. We'll be able to see it here in a minute, I'll show you guys, but chances of the shops around here open till late night. Yeah, I mean, as late as they can be. Usually the bars and the restaurants stay open till like 2 o'clock in the morning. A lot of the bodegas are 24/7. I think Katz's Deli is 24/7 as well, if I'm not mistaken, which, funny enough, is actually right to your right. So if you look all the way to the right of your screen, you'll see the big Katz's sign. Well, not anymore, because we're passing the truck. But it's right here. You guys see that? Right here, that's the Katz's sign. We'll see if it's packed tonight. Photos from around New York says Katz's is 24/7 on Saturdays. I'm not sure about Fridays. That would make sense, right? Looks like it's open though, photos, right? As we cross Orchard Street. I think there's a line out the door. There is. All right, let me catch up on the chat. Hey, who dat Dave? Wow, you were able to meet Billy Joel. That's awesome, man. All right, this is a good view for you guys. This is the very famous Katz Delicatessen. Now it's sad because there's only, you know, I mean, I'm going to say there's only one really good Jewish deli. That's going to get me in trouble because there's multiple really good Jewish delis open, but this is probably the best of the best. And my favorite one actually closed down not too long ago. I think it's actually been 5 years now. Carnegie Deli is no longer. That used to be a major tourist attraction. That was the best place on earth. Hopefully many of you who are listening to this live stream were able to go to the Carnegie Deli at least once before it closed down. I mean, that place was the best. That place, you couldn't beat that place. And it's so sad that it closed down. I think it was because the landlord, you know, wanted to raise the rent astronomically and they couldn't afford it anymore. And the sad thing is, it's like, okay, you want to raise the rent on Carnegie Deli. They couldn't afford it anymore. And you know what's in its place right now? Does anybody want to take a guess what's in the place of Carnegie Deli right now? Nothing. Nothing's there. It's all abandoned. It's all vacant. And all the windows are blown out. It's just broken glass. So it sucks. It's like, did we really have to close that down? Anyway. All right, let's continue on our way here. I'll show you guys one Essex crossing. You know, this looks like a new development. This looks like a multi-family building listed by Douglas Elliman. Let's check it out. Now this is probably let's see, 1, 2, 3, 4, 5, 6, 7 unit building. And I think each unit is a full floor, which is actually really, really cool. I wonder how much this goes for. If you want to look it up, 118 East 1st Street. 3 beds and an outdoor space. It's actually really nice. And I think all those units had a balcony too, it looked like. All right, so we're crossing past Avenue A. I'll stop to give you guys a nice shot of the neighborhood. Very lively here tonight. Wow, CC's is about 5,500, 5.5 million. How many square feet? I know it said it on the sign, but I already forgot. Now, what's been really fashionable about a lot of the loft buildings here is they have the elevators that take you right into your unit, which is actually really nice. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We usually do these lives starting at 8:30 p.m. Walking around New York City, talking about the financial markets. We'd love for you guys to come. CC says 2,800 square feet, not too shabby. And then plus you probably have the balcony too, right? Of non-living space, community space, perhaps. Now, I know we already talked about this, but now that we have some more people in the chat, I want to ask you guys this question. And it actually wasn't my question. I forget the viewer in the chat. It was a really good question. Barbara Corcoran, obviously extremely successful real estate mogul, made her fortune here in New York. Let's get out of the bike lane. I don't even know if this is the bike lane. It's like a half pedestrian, half bike lane. Anyway, I think there was a little back and forth between Elon Musk and Barbara Corcoran. Now, they both agree that commercial real estate, and we've hammered on commercial real estate, particularly office, I mean too much on the stream. Very bearish, very negative on commercial office space in Manhattan and other cities. But she's bullish residential real estate. But Elon Musk is bearish both, right? Bearish commercial real estate, particularly office, and bearish residential real estate, which is, you know, single family homes, condos, and the like. Who are you guys most in alignment with? Would you say Barbara Corcoran or Elon Musk? So are we double bearish? Or are we half and half? You know, Polo Dreams says, Tom, what do you think about the Epstein and JP Morgan situation? You know, I'm actually really interested in that, and I was looking into it, and I was reading about it. It's one of those things I don't want to sort of make a statement on, but I will say this. I find it very hard to believe, okay, that the CEO of the company didn't have any idea about the banking relationship with a very, very notable client that was going through a lot of legal trouble. That's what I'll say, which to me is disappointing, because Bill Ackman made that tweet the other day, essentially endorsing Jamie Dimon for president. I think Jamie Dimon's a good guy, but I find it hard to believe that he didn't know about it. I don't know. Again, I mean, I think it's going through its court case, so I don't know. I don't know. I'm just reading what's in the Wall Street Journal, what's in the New York Times, but I find it hard to believe that Jamie Dimon says, "Oh, I didn't know anything about it. I didn't even know who Jeffrey Epstein was." Of course, dude. If you are a CEO of a Wall Street mega bank, okay, you knew who Jeffrey Epstein was, especially being based in New York City. Let's just say that. But yeah, I don't know. That's what I'll say. I think they could have easily terminated the banking relationship. But again, I think people may have gotten greedy and maybe looked the other way. Why would you want to lose, hundreds of millions of dollars worth of accounts? I'm not sure how much money Jeffrey Epstein had with JP Morgan Chase. If I had to guess, it's probably over 200 million. Nobody wants to be the person who loses that $200 million account. But again, I think that comes to a greed issue and an ethics issue. But again, this is all alleged. I don't know anything that happened. I just was reading a couple articles. All right, Avenue C. We're almost there. Almost there, guys. All right, let me catch up on some of the chats. NYC Hiking Discovery says residential is better than commercial since traditional retail and office REITs are replaced by e-commerce and remote work. Yeah, I think the residential real estate market has been very, very resilient. Very, very resilient, because people are spending more time where they live, right? They're not going to the office, right? And if they do go to the office, they're only going 2 days a week. So naturally, people are spending more time in their homes. And I think, real estate, to keep it simple, supply and demand, right? And it's also a very rate sensitive industry, right? Interest rates are essentially the cost of money. The vast majority of people don't buy real estate in all cash unless you're like an institutional investor. But the problem is we haven't really had a lot of supply come on the market in the residential side of real estate, because a lot of people right now are sitting on a lot of equity in their homes. Now, yes, could the equity become eroded? And we get that argument. Trust me, we get that argument. Also, people who bought over the last 5 years, chances are your interest rate is below 4%. So even if you're underwater, right? Let's say technically you made a bad buy, you bought at the top of the market, and you're underwater on the deal, and you have negative equity in your property. But your monthly payment, right? Your mortgage, your taxes, and insurance is $1,800. Why would you sell at a loss to just go back into the marketplace where rents have doubled to pay $2,200 a month in rent, or go buy something else and your monthly payment is going to be double than $1,800? It's going to be almost $3,000, right? Because an average 30-year fixed, let's cross the street, because the average 30-year fixed is 6.88%. Wow, Hang with Mark Mom says my son's interest rate is 2.3%. That's ridiculous. That's crazy. Wow. Hey, Destruction Dynamics. This is Tom. I just landed in New York City an hour ago. What are your thoughts on a first-timer taking the subway down to Brooklyn Bridge from Times Square? I think it's an amazing night for it. It's probably the best night for it tonight. It's going to be really clear. I would say go for it, man. Go for it. It's going to be a nice night. All right, we're almost at the bridge. We overshot it a little bit. That's all right. Hey, Justin, since my 15-year mortgage is 3.625%. No way I want to give that up. Yeah, I mean, it's there's going to need to be a catalyst. If residential real estate prices are going to come down in a big way, which they're already starting to come down, by the way, right? And we reviewed this week, because we got housing data out, right? On a year-over-year basis, San Francisco is down double digits. Seattle is down double digits. But the East Coast is holding up rather well. I think things are going to soften. And if sellers are really motivated to sell, they're going to need to adjust their prices. So if there's somebody who's really motivated to sell, the only way that friction is going to be released is for the sell side to make a move, right? You're going to have to come to terms with the fact that this isn't 2021, okay? Where free money is getting passed out, okay? A conventional mortgage is going to run you 7%. So if your property was selling, right? If you look at the comps, if a property similar to yours was selling for $1 million in 2021, when rates were 3%, it's not going to trade for $1 million now, right? So, unless you want it to sit on the market for months on end, if you want to get the deal done, you gotta adjust for the interest rates essentially doubling, right? Now, in select markets and in the ultra luxury market, where the demand is, for bidding on a select few trophy properties, then yeah, some of this stuff will trade for more. But in most places, right, especially the markets that ran up like crazy during COVID, such as places like Austin, Texas, Nashville was a huge boom market. I mean, Nashville, Tennessee, the prices doubled there, literally. I think that is going to cool. Austin's going to cool. Fort Lauderdale's going to cool. I think you had probably, especially in terms of net migration trends, you've gotten at least 4 years of migration slammed into 18 months, particularly to states like Texas and Florida, right? So naturally, you're not going to sustain the same net migration. It's just impossible. It's not going to happen. All right, here we are near the bridge. But I don't know, in and around the communities in which you guys live, are you starting to see home prices come down a little bit? I think condos are going to cool before, single family homes. Justin S. says, I think the only catalyst is sudden housing boom. If lots of people bought like second, third homes, got it. Chinook Wins says Florida was devastated in the 2008 real estate crash. Phoenix was another loser. Yeah. In 08, that's actually a really good point. In 08, some of the markets that were decimated the most. All right, we're at the bridge. Is Miami, Florida. This is Delancey Street. Beautiful view of the bridge. So is Miami, Florida, Fort Lauderdale. Las Vegas got hammered during the financial crisis, and that's mainly because those specific markets, leading up to '08, there was really rampant speculation there. Because back then, the majority of people who were buying were either real estate flippers who were just trying to buy and sell really quick to make a quick profit, or people buying second and third homes, right? You know, if you look at the average salary in 2008, let's say if you wanted to work in New York City in comparison to Miami, I mean, there's just more infrastructure here. There's better jobs here. But that's actually, and I know the old saying on Wall Street is it's never different this time, but in the Miami, Fort Lauderdale market, it actually is a teeny bit different this time. A lot of the migration trends and a lot of the purchases haven't been people buying a second or third home. It's been people actually moving to the state for real jobs now, right? There's been so much actual job growth in the state of Florida. Real tech companies, you know, some of the biggest financial firms. So I think that Miami will be sheltered, and it actually has, right? You're seeing the huge price declines in Silicon Valley. You're seeing the huge price declines in San Francisco. You're not seeing the price declines in Miami, although maybe not yet, but prices are still holding steady. NYC hiking discovery says Florida and Texas are not fall resistant. It is not a good place for investment, but to go for owning your retirement. I think that's a very broad statement. Some of the best returns throughout the recovery in the financial crisis have been in the Sunshine State, and there's a lot of job growth. Now, obviously, markets run in cycles, right? But I think the 2008 financial crisis has conditioned everybody to think that every single time the market falls into a correction, it has to be like an Armageddon catastrophe. Has anybody else sort of noticed that? Has anybody else noticed that cycle? And rightfully so. I mean, people lost everything in '08. It was horrible, you know, what the bankers did to the country in 2008. But that's really conditioned people to think, oh my God, the market is falling. The S&P 500 is down 10%. It's going to zero. Like every time I talk to somebody, right, that is not directly involved with the financial markets, it's either thinking in extremes. It's either the market is going to go to zero and the housing market is going to crash 70%, or nothing else is going to happen, right? But in reality, you could just have a normal correction. You could have a normal 10% correction across the board and find a floor, right? Not every correction has to be an Armageddon, right? I think that's an interesting point. Okay, we are about to be on the on-ramp to the Williamsburg Bridge. Maybe we'll have time to walk like halfway across it. We'll see. Hey, Randy the Machine, what's up? This is 2008, started in '03 and '05. Elias, what's up? This is kind of a cool shot at all the graffiti here. Austin city limits, we're about at 22%, so I think we'll just have enough time to do both. At least we should. All right, here's the main entrance to the bridge. And this is the building I was telling you guys about. This is 1 Essex Crossing. Maybe it's the other one.
I think that shit is 10 minutes away.
I think it may be the one on the right.
You missed.
Oh, I think that place is a speakeasy.
I don't know if she can. I'm not sure if she can do the regular.
All right, Clinton Street. You can see all the cars coming off the Williamsburg Bridge. Hey, Solo 401, what's up, man? Good to see you. Long time no see. Happy Friday. Hopefully you have some cool plans for the weekend. All right, let's cross. Fry breads. Tom, what do you think of Vang? I've never heard of it. What is that? If you want to share with us. Good to see you, friends. I work the weekends. Solo's a good American. Love Solo 401. Always working, always producing, always being a great guy. Delancey Street, though, guys, it's a little bit shifty. We'll just say that. You know, that is 1 Essex Crossing, because the Market line, this is the, you'll have like the Regal Cinema in there. This is it. I know, Michael Joseph is like, this is the Triple Crown. Yeah, we went, so what did we do this week? We did the Brooklyn Bridge first, then we did the Manhattan Bridge. This is the Williamsburg Bridge. Hey, NYC Hiking Discovery Kevin. Because I walked this bridge once in 2 months ago you walked it, nice. Down from the bridge you will see the East River, and getting narrower and narrower as more recreational site. Took up a lot of the space. You know, Kevin, when we were walking, what was it, Sutton Place, so on the east side of Manhattan, I think they're building some sort of an elevated east side park that runs right next to the highway. Do you know when that's going to open? That thing looks really nice. I don't even know how to access it. But if you go all the way to Sutton Place, which is one of my favorite neighborhoods, by the way, and you go all the way to the end by the parks, you'll see it. It's like a nice high-rise park. It almost kind of looks like the High Line. Hey, this is for Solo 401 in the chat right here. You can see the World Trade Center in the distance. Wow, Solo 401 moving to Tennessee next year. What part? You know, everybody I've been talking to is either going to Texas, Tennessee, or Florida. I've been to Nashville once on a work trip. It was all right. I don't know if I could live there, but the main Delancey Street side. Wow, cool, dude. You're gonna work for Smith & Wesson. That's awesome. Very unique. All right, so let's head towards Chinatown now. There also seems to be a lot of vacant retail space here too. If you see across the street, a lot of vacancies. Hey, Krog Dog, what's up? Yeah, Smith & Wesson is also publicly traded, right? I'm trying to think of the ticker symbol. I'm blanking on the ticker symbol. Does anybody know the ticker for Smith & Wesson? I don't think the stock's doing too well, though. All right, I'll try to make a guess. SMW, maybe? I don't know.
Oh, sorry. Next up.
A lot of traffic backed up trying to go over the bridge. All right, we're gonna make a left here. You know, we'll go over two more. We'll go over to Bowery. And then we'll make a left, and that should bring us, SWBI, I got it. Stephen Bate, thank you. I didn't know if that garbage truck was going to stop. Allen Street. Hey, John Kelly, what's up? This is a typical rockin' Friday night in the Village. Yeah, the West Village was pretty busy too. We started the live stream over there. This is Eldridge Street.
Like all you can.
This looks like some sort of painting shop. That's true. Western Matt's Dave. Or who dat Dave? It'll cut you across the island of Manhattan, at least. All right, we'll quickly review everything we went over today. We're already at the 2-hour mark. And then I think we'll just make it to Chinatown. So the biggest thing today on Wall Street was the non-farm payrolls, which we covered. That came in extremely hot. 339,000 jobs the US economy added. However, the unemployment rate did tick up to 3.7% from 3.4%. The sector of the economy that added the most jobs is business. Is business and services. Sometimes the people that are doped up on heroin, they just fall into the street. It's crazy. Then government, then healthcare. Now the JOLTS report, which is also good to look at in tandem with non-farm payrolls, shows that there's more jobs than last month available. 10.1 million to be exact. Then we talked about housing. There was a pretty notable sale. D.R. Horton, ticker symbol DHI, sold about 4,000 single-family homes to a New York-based real estate investor for about $1.5 billion. And that fuels the argument that big institutional investors are sucking up a lot of the supply and outbidding the regular mom and pop investor that just wants to buy a single family home to live in, right? Which I do understand that argument. You know, chances are a big real estate investor with billions of dollars in capital is going to be able to close much quicker than an individual with a couple $100,000 saved up to put down on a house. So perhaps that is fueling the supply crisis that we're having, because you're seeing big institutions buy thousands of homes in a big block, and they obviously buy these homes not to live in themselves. They buy the homes to rent out to people like me and you. So I think that's a trend we need to watch. Yeah, Joel PMs is a nation of renters. It seems, unfortunately, that's where the nation is moving, right? It's moving to a renter nation where you're probably going to have a handful of big landlords, right? Like the Black Rocks and the Blackstones. A lot of random shrieking tonight. Oh, I think they're playing Spider-Man up here. Look at that. Yeah, David Pershing said subscription housing. HAAS. That's probably what they're going to call it. HAAS. Housing as a service. And then lastly, you know, the non-farm payrolls was the real last piece of data that we were going to get before the FOMC meeting, which is June 15th, or excuse me, June 13th through the 14th. So we have increasing amount of jobs available. We have non-farm payrolls coming in hotter than expected for 3 months in a row, with all of the previous non-farm payroll reports being revised higher. And people are trying to make the case for a rate pause as opposed to a rate increase. I don't know. There's about a 35% probability that the Fed will raise rates by 25 basis points. But many on Wall Street, including the Fed chair himself, Fed Chair Jerome Powell, are forecasting a pause for June and then a 25 basis point rate hike in July, which would bring the Fed funds target rate to 5%, to 5.25% from what it is right now, to 5.25% to 5.5%, which is where many people believe is the peak rate. So the consensus is that the Fed's not going to go above 5.5%. We'll see. All right, let's make a left on Mulberry Street. This will take us through Little Italy and down to Chinatown, where we'll end the stream. I think we'll just make it. Little Italy seems to be packed too, which is good news, because every year Little Italy is actually getting smaller and smaller and smaller. A lot of the restaurants are choosing to leave, head out to Staten Island, head out to Long Island. Unfortunately, Yeah, hang with Mark Mom. Little Italy is fun. It's one of the best places in Manhattan. Well, across the street so you can see it a little bit better. There's one of the best bakeries in the entire city right here. It's called Ferrara Bakery. Maybe some of the restaurants are closing early tonight. Hey, Fun Feeds, what's up? Good to see you. Thank you for joining us. I think we're going to pass Cannoli King here in a moment. Yeah, Michael Josephs is the San Gennaro's Feast. You know, I'll say something about the San Gennaro's Feast. I went last year, and my God. Now, I'll say this. I absolutely love it. Okay, I absolutely love it. But, boy, is it expensive. I would literally say the prices probably went up 200% year over year, which I get it. I still think it's worth it to go and support the local Italian eateries here in New York, but especially at the San Gennaro's Feast, it is expensive. You know, sausage and peppers, I think I paid like $20. I think it may have been a little bit more. Does anybody remember that stream? I said I couldn't believe it. I went to the San Gennaro's Feast for sausage and peppers. It was 20 bucks. But this is the Ferrara Bakery, which in my opinion is one of the best in all of New York. Really good Italian pastries. And then in 2 more blocks, we'll have made it to Chinatown. I know, hang with Mark Mom. Isn't that insanely expensive? And that's for one. This is the Cannoli King, by the way. Very famous place. Very good too, by the way. Little Italy seems lively tonight, which is good. I'll try to give you a shot of this angle. All the way in the distance, you can see the Empire State Building. Beautiful fire escapes on these buildings. Yeah, looks like everything is shutting down for the night. I forgot we started the live stream late. I think we started at what, 9 o'clock? 9 p.m.? 9:30? Wow, it's almost 11. Well, we almost made it. And I think we'll end it right at the start of Chinatown, which is right here. But we will be back tomorrow at 8:30. We may actually start from Dumbo, Brooklyn tomorrow. So we'll be starting from a different borough and maybe walking back over the Brooklyn Bridge to Manhattan. So if you guys want to see that, it should be a pretty clear night, so the views should be awesome from the Brooklyn Bridge. Feel free to join us tomorrow at 8:30 p.m. for that. If you look in the links in the descriptions, you can feel free to connect with us on Twitter, on our free newsletter, where we give market updates on both the New York City real estate market and the equity market, fixed income and the like. But until then, I wish you all a very prosperous, safe, and relaxing weekend. So DWG, appreciate it. Solo 401, good luck with your new venture to Tennessee. We're all rooting for you. Keep us updated. Brick Stonewall, Kevin Ramsey, Christine, Joan K, Who Dat Dave, all of our moderators, thank you guys. Joseph Hardaway, Pat, Will, take care. This is Chinatown, we just made it. There's always a bull market somewhere, you just need to know where to look. Have a good weekend, guys, and we'll see you tomorrow. Take care.